Well, gold has seen a spectacular run this summer, but was settling down on Friday. Joining me today, Bill Baruch, president of Blue Line Futures. Bill, thanks so much for joining us here.
Thanks for having me on again.
Yeah, of course. So are bearish cracks appearing in this bullish gold market? How do you see that today?
I think gold hangs in. I mean, the technicals have been extremely constructive. I mean, just look back earlier this week. We had a quick reversal off that 1546 high, went all the way down to 1488. And ironically, 1484, 1488 is my line in the sand on the research that I put out. And it pinged that, and it's recovered. It's continually putting a nice constructive landscape on. And I got to be bullish near term as long as it stays out above 1488.
Well, I got to give you kudos there, Bill, because last time we spoke, which was 2 months ago, I can't believe it, gold actually followed your call and even shot past your target of 1484. So, you know, is gold overbought now?
It's not overbought. I mean, here's the thing. I mean, when we last spoke, we've seen negative yielding sovereign debt around the world continue to mount. It's at $17 trillion right now. That's bullish for gold. But one of the things that I do think has been an extremely great tailwind for gold is the move in the 30-year and other treasuries, the U.S. treasuries, higher. You're seeing some sort of capitulatory action over the past couple of weeks. And one of the reasons why, going back to the start of 2017, through the first, really up till May and June of this year, I've been extremely bullish. The treasuries is because there was a massive net short position. It was a ticking time bomb, and it was going to explode. It has exploded. This is that capitulatory action right now. So if treasury markets, the U.S. treasuries start to come in, and I think we could see a little bit better data from the U.S. Those come in a little bit, meaning yields rise a little bit. That could be a headwind for gold. I think, I got to be technically bullish out above 1488, but you do want to manage your downside. You want to lock in some profits. And one of the ways I'm hedging gold is by building a December put position in a 30-year bond.
Okay, and what about on the silver front? Obviously, silver was also getting a nice bounce following gold's pace here. What are you seeing there?
Well, silver's done extremely well. Every time it kind of dips below 17 bucks, you're seeing people come in there and buy it. And that's something that silver hasn't seen for a while. Usually when it gets those big waves of selling, it just follows through. So we're starting to see a nice floor build around 1650. The trailing 50-day moving average is all the way down below 16 bucks. So I'd like to see that 50-day moving average start to catch up. And I've always been, time and time again, I've been on here saying, silver, when it gets out above the 50-day moving average, it stays out above there for a while. And when it gets below there, that's not good. So for now, remaining constructive above the 50-day and above 1650 right now is great for silver. It's more consolidating right now, but I think its time will have it will have a good time, and it will be able to shine a little bit better in the future.
So you can confidently say we are in an official bull market for the precious metals?
Absolutely.
Okay. Last thought for you. You mentioned the yields before, Bill, and with this race to the bottom around the world in terms of yields, are you at all worried about central banks not having any ammunition to fight against the next bear market?
I am worried. I do think that we're in a little bit of a panic stage right now, and that's what we're seeing in the treasury markets in this sort of move higher, and where the yields are just dipping lower, a record low in the 30-year. I think we are in a little bit of a panic mode right now. I think the U.S. data is not as bad as people fear. I think we could start to turn a bit of a corner. With that, the question is, what does the dollar do? And ultimately as well, I don't think the dollar really runs higher as much either. Gold overall, it's a long-term constructive landscape. So pullbacks, it's just a matter of again, having those holding technical levels, holding technical support, and that's what's going to be important over in the near term. And I'm bullish gold out above 1480 in the near term, but I do think again that U.S. data is going to get better. And one of the ways to hedge gold and long gold positions, is not only just protecting with puts and gold, but buying a put position and building a put position in December 30-year treasuries. And that's the way you could protect yourself if you are holding long-term gold, and the fact that U.S. data does turn a corner here over the coming 30 to 60 days.
All right, Bill Baruch joining us from the floor of the CME. Thank you so much, and we'll see you soon, not 2 months, okay?
Thank you.
All right, and we'll see you back here on Kitco News.